Yeah, I'm losing my
Pete, we're
edge.
going to talk about trading stock index components, which is a wordy title and also one that if you think about it for like 10 seconds, it just means trading single stocks. But you're going to see here today that there's a lot to the components of stock indices. There's a lot that within those components make differences between the different stock indices that you trade, but also the weightings of those stock index components very different. And I want to look at something that everybody and their mother has been talking about, which is the top stocks in NASDAQ moving this NASDAQ to new highs. And it's really the answer to, how is NASDAQ making new all-time highs consistently? Even here today, I think it's a new all-time high again, even though we saw a lot of turmoil at the stock market open today. And it feels like, wow, I'm reading about turmoil with different trade deals, different coronavirus, pockets of coronavirus getting worse in the country and abroad in places like Brazil. How amid this turmoil is the NASDAQ consistently not only bouncing, Pete, not only moving higher, but new all-time highs? And I think we have a pretty simple story for this, right? I mean, what is your answer to this question?
Well, you know what? Again, it's the nature of construction of an index. What constitutes an index implies a group of constituents, and through that you get a little bit of diversification. The challenge is that often what you built 10 years ago doesn't hold true today. So this really has become this reflexive. It's not like the NASDAQ is out of line. The NASDAQ is doing exactly what the methodology states. There's no cheating of the math here. This is just the representation of you can argue, unfortunately or fortunately, it's really getting down to, this is, I don't even remember this last time we had a parabolic NASDAQ move. This is going to seem so small, but we went from 980 to 4,000. I never remember the constituents becoming so small that comprise such a large amount of this. And this is really that representation of these hunted for, sought after stocks being used within the composition of this index. So there's nothing that's broken or cheated here.
Yeah.
It's just understanding what you're getting. And that's why different stock indexes perform in a different fashion.
Yeah, and it becomes this thing of, and I know people bring this up often, and I'm not trying to reduce this conversation to something as simple as stock index health of economy and people that make up the companies that work into that stock index. It's more just this index in and of itself has been reduced to literally just a few companies that are relatively unaffected by any news of turmoil, or and not even turmoil in the sense that stock markets should be crashing, but just stock markets, given what you see and read, shouldn't necessarily be making all-time highs every single day. And it's because of this. You've got 25%, a quarter of the index in two companies here, Apple and Microsoft, that are, at the end of the day, obviously no gauge of how the economy at large or the people of this U.S. economy are doing or feeling. And it's also just relatively unaffected by what's going on. And then also you've got 11% in Amazon, a stock that has taken off almost as a result of the most recent crisis here with COVID. And then there's Google rounding it out with 7%. I mean, Pete, this is a total of 40% in these four stocks here. And like you said, it's not misquoted. It's not wrong. It's just, in essence, you usually go to a stock index. In my mind, I would go to a stock index to be like, all right, how is the economy as a whole doing? Right. And right now, if you go to the NASDAQ index, you shouldn't go to it for that. You should go to the NASDAQ index for, okay, how are these four stocks doing today? And that's really the story.
I mean, if it's a technology index, which has been the proffer and the again, when it was built of 20, 30 years ago, that was the constituent selection criteria. These four stocks represent the world of technology. Sure, they're parts of it, but I don't think they're necessarily a holistic assessment or anything close to it. It's just, and I think you make a great, it is what it is. So we deal with it accordingly. But makeup is important to understanding. I think it doesn't, this doesn't tell me that this index is rich or poor, but I think it speaks to within the world of equity indexes, what I'm looking at and the translation of not getting trapped into that thought that just because this particular index is moving at such an accelerated rate over everything else, this is for some reason overpriced. It's just representative of the constituents. And for me, the challenge is those are very narrow constituents to supposedly trade a basket off of.
Yeah. And also just as a reference point, this performance is the last month of trading here. And so, I mean, so if you go to an index, when you think about any kind of index, whether it's an index that tells you about consumer sentiment, an index that tells you about weather in South America, an index that tells you about, oil that is being dug up in Europe. An index is in my mind meant to just gauge something. And when I think about a stock index, a stock market, I want kind of a full view of that market. And this stock index is a view of right now. We just saw 40% of that index is in 4 stocks, and they're the biggest. Hey man, they're the biggest stocks in the U.S. economy by far. That's why they're so heavily weighted here. But this is something that I would, and this is why we constructed it this way. This is something that I would expect more out of a traditional, or actually maybe not traditional because NASDAQ is traditional. The idea, the concept of a stock index, this is what I would expect more, a full view of the market. And you can see here, yes, this is a significant bounce back off of the initial COVID-19 crisis and the fear around that. Yes, it seems like companies have a better handle of it. The U.S. economy is trending higher off of that fear and these lows. But you can see this uncertainty of the last couple months playing out in the stock index and in the way that it's reporting the state of these companies here in the U.S. And why is that, Pete? Well, it's not like the small stock 75 is trying to find, let's find the most uneasy companies. Let's find these companies that move back and forth that, that amount to, up and down movement, but at the end of the day, flat for the last month. It's the same stocks. I would guess the crossover between the 75 stocks in the small stocks and NASDAQ is pretty significant to the point where those top 4 stocks in NASDAQ in small stock 75, but Pete, just kind of flattening out those weightings a little bit so that you get a true representation of all the stocks in there. And you get this 20% move in Amazon, sure, but it's only about a percentage point and a half. It's the same as some of these stocks that are performing very poorly here. And this is what's really interesting to me, Pete. In the last month, the top 5 and bottom 5 performing stocks in the small stock 75, very similar and symmetrical about that performance. And it's not to say that, Lyft or these airline stocks or Grubhub or Tesla aren't in any of these other stock indices, because a lot of these stocks are in all of these stock indices. Right. It's just, equating that weighting and giving a full representation of how all these stocks are doing. And that's why, you've got 38% higher in Tesla, sure, but you've also got 32% lower in American Airlines.
Yeah, I'm surprised. I love you put this together because it speaks to, a diversified index, but also I don't remember ever seeing extremes like this in terms of, the number one, the symmetrical nature of the returns and we've seen the extremes, but the symmetrical nature I think is really fascinating.
Well, yeah, and that's why at the end of the day, you have this index, right, that in the last month has seen its ups and downs, but is relatively flat. It's because you have a stock market right now that is very, I guess I use that word turmoil, but it's not in turmoil. It's just very kind of iffy right now. Like, are we out of this? Are we not? And you're seeing it across different stocks. these stocks feeling good about where they are right now, these not, and it translating to a stock index that's telling you, yeah, we don't know if we're out of the woods yet or not. And you go back to NASDAQ, and you would think everything is copacetic across all sectors, across all stocks.
Right.
And it's not the case. It's just these four stocks, right?
Yeah, and I think that you can argue, yeah, but look at the move on the NASDAQ. That, there's the move. That is the move. But as a tradable opportunity, sure, if you bought it, you never, I mean, very rarely did you sit with a loser for more than a day. I don't think any of us who are traders are necessarily saying there aren't any momentum traders left because it doesn't necessarily work. The back and forth is what you want. It's really hard to piecemeal that out from NASDAQ right now because looking at that up move, any of those up moves were interesting sells and were painful management techniques. Here you're getting what you want, which is the back and forth. I think there's more consistent tradable opportunity here with something that holds on. Again, the sectors will change, and we have 5 sectors within the small 75. And depending on performance, as you highlighted, you'll get a very different result. But the ebb and flow of that is a tradable opportunity, not the parabolic nature of a very small, very narrow-based index.
Yeah, and this is something I want to break into a little bit next week. Friday, everyone's kind of chilled out. I want to just bounce this idea around and give people some pretty interesting, cool numbers here for recent performance in these stock index components, these single stocks. But I also want to start to talk about the idea of this is kind of the next place I go with something like this move and this top heaviness and this kind of iffy move and the equal weighting in these stocks, which is I want to start to formulate ideas around buying or selling an index, having an idea on the stock market at large, and then maybe picking out some of these outperformers and maybe, selling a share or two of Apple against a long small stock 75 or a long NASDAQ position, or vice versa, wanting to be short the stock market, but then wanting to, pick up a share or two of something that's beat up, or whatever your strategy is.
Right.
I think it's a cool thing and a very interesting time because exactly the way that you put it, Pete, rarely do we see this type of movement here where in a month, a couple of stocks are up 20 to 40%. And in a month, a couple of stocks are down 20 to 40%. Right. It's a very interesting time right now, I think, to have your stock market biases, long or short, but then also look at, okay, well, if I am short the small stock 75, I think the stock market is going to see a little bit more fear, a little bit more bearish activity, but I want to pick up as a hedge some of these value plays like these airline stocks that have gotten absolutely hammered in the last few months. I think it's a nice strategy to almost look at. I would call it like a covered call, like almost like an intra-product covered call, where you're buying or selling the index, and then inside of that index, you're selling a call or put, or even the small stock 75. It's nice. It's such a small product that you could literally sell the index and buy a share of AAL against it. And it's like, okay, if the index moves lower, but my AAL value play holds or even moves higher a little bit because it's down 30% in a month, it's real easy to formulate that. Whereas, trying to equate that with this big NASDAQ or even the big micro NASDAQ, a little tougher. So we're going to break into.
That's it, Frank. Just to all that, those additional strategies from a pure long or short index bias are interesting strategies that everyone has an opinion on. Executing that opinion is where it becomes challenging because materially you always have a mismatch between the amount you can trade and what's available to you. A small index gives you the ability to add those building blocks and get to that next iteration of trade idea without creating a disproportionate trade on either side or consuming too much capital with one idea. So this is going to be a natural evolution of trade ideas as long as we can build it in a world that fits us.
Yeah, no, and I think that this is that world here, a smaller stock index to get your hands on, to get that efficiency on in futures, and then being able to model that pairs trade, or what did I call it, intra product covered call or covered put, with relatively small components as well. It's an easier fit here that we're going to dive into next week, how to put that to work exactly, because there are, unfortunately, I mean, it's Friday. I didn't want to kill people with numbers and methodology today, but next week we will have to crunch some numbers on how to, get long or short the small stock 75, and then put some of those components that have really reached far to the upside or far to the downside against it in a cool little pair. But today, just talking about trading stock index components.
Fantastic.
Next week, we will put together all those other ideas